I want to tell you about a trade that for about 4 minutes I genuinely thought was going to be a loss, but it turned into the biggest single trade I've taken in weeks, almost $14,000 on Euro USD. But I want to take you through the part nobody usually shows, the part where it almost didn't happen. The morning started the same way it always does. The 4-hour range was marked on Euro USD, where I use New York time. First candle fully closed before I drew anything. If you don't understand how I get this range, it's basically the high and the low of the first 4-hour candle that formed on the day, and I usually use New York time to get this candle. So then I drop down to the 5-minute chart and watch price drift in between the range for a while. This is usually where my waiting game starts. Then it pushed down below the range low. A few candles close underneath the range, full body candles, clean break. Then the next couple candles close inside the range. That right there is my reversal signal. So this is a long trade, a long setup. My MACD is still positive. It's positive when this blue line is above this orange line, or in other words, the MACD line is above the signal line. Momentum is already pointing up beneath the surface even while price had just finished dipping. I remember sizing in properly to this trade. The setup checked every box. I had no reason to hold back. So I took an entry on the close of this candle right here. Stop loss at the low of the breakout candle, and my take profit is always set at 2R, which means for every dollar I risk, I make $2 in return. Price moved up almost immediately, which was good to see, but actually means nothing because I've been in trades before where it looked good at the start and immediately turned around and hit my take profit. So I'm looking, I'm watching. A few green candles, steady climb, everything was tracking the way it was supposed to. The price had started stalling a little bit, but when I place a trade, I don't want to be moving my stop loss or closing it before it either hits my take profit or my stop loss. That's when you change the entire probability of your setup, so I don't want to do that on any trade. Then it hit the target, then it closed, $13,000, nice day. So something I think about a lot is how trading rewards boredom over excitement. Most people get into this trading thing because they want the adrenaline, the big number, the fast move, the rush of watching a winning position run. But let me tell you, the traders who actually last are usually the ones who've made peace with how repetitive this job really is. The same checklist, the same process, over and over, thousands of times, with no guarantee any single individual day is going to be interesting. But the traders who blow their accounts are really the ones who lost on a bad setup. They're usually the ones who got bored with the process and started chasing something more exciting. It could be bigger size, more trades, setups that don't quite meet the criteria. Excitement is really expensive in this business. The version of trading that actually builds wealth looks almost monotonous from the outside. I'd rather have 10 boring years of consistent, repeatable decisions and results than one exciting year that ends with me starting over.